So we have a Fed meeting and then we have a jobs report. Let's start with the Fed meeting. The decision itself, not expecting too many fireworks there, but as always, there's a lot to talk about in that press conference, Julia.
Absolutely. There's a lot going on. Of course, Chair Powell will put on his best poker face and reassuring voice and tone, which he's very, very good at, and say that, look, that things are, there's a lot of disruption going on. So far, you've got a little bit of creeping higher in inflation, some softening in the economy on balance. They're going to continue to be in the wait and see mode. I do think he will open the door to making an assessment and a possible adjustment at the September meeting. That seems to be the consensus across the committee. And they'll have 2 more full months of data to judge the health of the economy and the state of inflation pressures by September. So that's a lot of information. Right now, it's sort of punting for a couple of months.
Julia, what do you think about, if we get a 15% base level for tariffs globally, I guess supply chains will eat some of that, but the lion's share is going to be paid by U.S. companies and U.S. consumers. How much of that bill does the latter foot? How much do U.S. consumers see coming through in inflation? Is it only going to be 1%? Is it going to be 2% more?
Well, our forecast is for core PCE inflation, the metric that the Fed targets, to rise up to 3% or a little bit higher by the end of the year. So that's a full percentage point on core inflation from where we are now, more than a full percentage point. And that's assuming that consumers bear the brunt of half of the tariffs and that half of it gets absorbed into company margins. Either way, that's a pretty big drag on the economy. If you look at tariff revenues, we're on track to collect more than $350 billion in taxes on the U.S. economy on an annual basis. So we just got a big drop of tariff revenue for July. This is real money, and it's got to be absorbed somewhere. So consumers will continue to see prices creep higher. It takes several months for that full effect to pass through. And in fact, one of the risks to the September FOMC meeting is they'll get August inflation, and by our judgment, that's going to be the peak tariff pass-through. So you could see some pretty firm inflation numbers going into that meeting, which will really complicate decision-making.
So that's the Fed part of it. The other part is, the U.S. consumer and how much this hurts. I've heard some wild, I think the Tax Foundation expects incomes to rise 5% after tax, which would be huge, right? That would be very helpful after one big, beautiful bill. And President Trump is talking about giving rebates somehow to the consumers that he's taxing with these tariffs. How do you make sense of that?
Okay, so let's break that down a little bit. The tax cuts are going to mostly very specific households, mostly high-income companies and households in the near term. Any tax cuts for sort of median households kick in next year. So in the near term, consumers are looking at a hit to their disposable income from rising prices. So we look at the labor market, job growth is cooling, wage growth is cooling. So nominal wage growth is slowing down. Meanwhile, inflation, the prices that they pay on goods and services, and goods in particular, are picking up. And that means a squeeze on the consumers. Then you add in the uncertainty consumers are feeling, and we've seen a lot of hesitation and caution, rising savings rate in the first half of the year, even before any of this actually hits consumer pocketbooks. So I think the risks are that we get squeezed in the second half of the year. There's been some relief in the market that it hasn't showed up so far. But if you look at what we're going to see in GDP, consumer spending is tracking less than half of what it was tracking last year. That's a lot less revenue growth for companies to work with. Add in frictions from tariffs and trade wars. And, it's not an easy backdrop for U.S. companies right now. There's a lot of enthusiasm about what AI can do in terms of resolving some of that squeeze through productivity gains. We'll see how all of that nets out. But this is, the big, beautiful bill does not solve all the problems or the challenges that the U.S. economy is facing.